The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. It is May 23rd, and it's roughly 12:45 Chicago. I opened up the room a little early today because before I present, I have to go over some disclaimers. So, again, I don't normally like to just throw them up there and tell you to read them, then shove them back down. I'll take a few minutes to go over them because I've been around the markets for almost 25 years, and I've really seen the good, the bad, and the ugly when it comes to trading. So I do like to bring these up. So, so I will bring that up. In addition to that, once we go over the disclaimers, I'm going to break down the trade setup that you'll see in the training room. Okay, so you'll see the method, the buzzwords. I'll go over some explanations on why things are a certain way. So we'll cover that. And then what we'll do is we'll take that that setup, and we'll go inside a live market, and we'll put trades on, and we'll take them off. And I'll show you how to manage them from the DOM. Okay, and this tower over here. Let me get my highlighter out. Okay, this is where we do. If you're brand new, this is where we do all our buying and selling. Okay, so if we get the signal to go long, well, you're going to see me left click in the green. And if we get something that says, hey, we need to get short, then you're going to see me left click in the red. Okay, everything's executed on this tower. Okay, and that's what you'll see in the training room too. So again, everything's going to be in slow motion. So we'll take our time doing it. Along the way, if you have questions, you can just put them in the question box, and I'll see them, and then I'll address your questions as they pop in. Okay, if you're brand new, if you're wondering, hey, you're on the trial, maybe you're wondering what the heck am I, what did I sign up for? This is going to be a great cheat sheet for you. Okay, it's a great syllabus for you to lean on, because I'm going to go over everything that Michael does, but in slow motion. Okay, so when you go in the training room, hopefully you can absorb things quicker. You can see some of the same stuff that I'm doing. You'll see it in the training room, but in fast forward. And then at the end of the trial, hopefully you can make a better decision on whether you want to push the PayPal button or not and pursue this path that you're taking. Okay, so the idea is to give you an eyes wide open approach. Okay, if you're brand new. CFRN members coming back here, hopping in here this afternoon, great. This is going to give you a chance to ask me questions, fine tune what you're doing. If you're spinning your wheels, maybe there's something I can add to get you out of the rut. Okay. This is going to give you a chance to learn the personalities of the markets that we're trading. Okay. So more screen time is what we're talking about, right? So those little things are important. Okay. What I'm also going to do, because a lot of times I'll ask people to send me screenshots. Hey, I got a break even, I got a loss here, I got a break even, I got a +4 here. Guys, I'll ask guys, hey, look, if you feel like you're not progressing, send me some screenshots of the trades that you're taking, and I'll critique them in between phone calls. All right, so that's fair game. So my point is, I'll go over some of the traps and the things that I've seen over the years that people kind of fall into, those traps that people, stub their toe on. Okay, so we're going to go over that. And again, oops, sorry, I hit the button there. Let me turn that up. If there's something I see, I'm gonna point it out, and I'm gonna say, look, here's a big thing that people fall into. All right, so this is a live setting, so my phones are buzzing. So throughout the program, okay, I'm going to hit the mute button and then pick up my line. So one sec. Here's one phone call already. All right, so maybe a little callback. All right, so that's the game plan for this afternoon. All right, so first order of business is the disclaimer. Okay, as I said, I could just tell you take a few minutes to look at it and then go on to the next slide, but it's it needs to be talked about. Okay, so I'll go over it Okay, if you're here every Thursday, this is a good time for you to get a cup of coffee. But if you are brand new, especially brand new to futures, I would pay attention. Okay, because this disclaimer really is for the new guys that are entering our space. Okay, and basically it says you can lose everything and some in your trading account if you don't have a trading plan, if you're not using stop losses, if you're not engaged in the market, the news, uh, maybe you're not aware of what's going on with the markets that you're trading, the personality of the markets that you're trading. If you ignore those factors, this disclaimer is going to hit you right smack dab in the face. And like I said, I've been around for almost 25 years, and I've seen it happen. Okay, so it's meant to scare you, especially the brand new guys. And I know it's not a great way to start a webinar off, but it's a reality of trading futures because this is a leverage market that we're dealing with. Okay. The other thing is that the funds that you put in a trading account should be risk capital. It's capital that you can afford to lose and not change your lifestyle. Okay. I know nobody likes to lose, and that's a big deal in trading futures. Okay. You are going to have wins, you're going to have losses, and that's how you bounce back from those losses and how you react to that. Do you follow the discipline that you're trading, following and stuff like that? That's going to be a big deal. Okay. Not only is it just functionality of, hey, I have a set of rules, and hey, I have a platform, and I need to do this and do that. There's more than just pushing buttons. Okay. You're going to go up and down an emotional roller coaster ride when live funds are being traded. Okay. A few things that pop up. The guys that usually get to the CFRN table, okay, they're kind of numb to this. Okay, they've been to this guy, that guy, this guy, that guy, and they've been worn out they've been beaten up pretty good. Okay, so these are guys that have been around that are looking for a place where they can kind of sink their teeth into and find some discipline and a community where they can work together with others. Okay. So a lot of guys, if you in that category, I've seen that all the time. Okay. If you decide to go down the CFRN path, okay, as we're going to discuss here, real soon here, you're going to have a set of rules. So you are going to have a trading plan, right? Every trade has an 8-tick stop attached to it, right? So you are going to have a stop loss. You're going to be on a 4-tick range chart. So you're going to have to be in front of the screens. And not only are you going to have to be in front of the screens, you're going to have to be actively engaged in what's going on. Okay? Because you're going to be involved in some aggressive risk management rules. And we'll go over those too. All right? And CFRN, they will not trade around news reports. So you'll be in tune with, the news items during the course of the day. All those things, as I outlined earlier, are a recipe for disaster if you're not doing those stuff, right? This disclaimer will hit you in the face if you're not watching over those things. CFRN, you're going to have that stuff, okay? So if you go down that path, yes, okay, you're going to water down this probability of this smacking you in the face. Will it reduce it? Will it eliminate it altogether? No. Okay. You could be doing all the right things. Okay. As I just outlined, you can have the stop in, you can be in front of the platform, you can be engaged in the market and all that sweet stuff. In the end, if we get another silly tweet or something and the market goes into a tailspin and you have a stop in place, there is a chance that stop loss could get jumped and not get executed. That means you have unlimited risk on the table if that happens. It happens rarely. It's a possibility. Should you be aware of it? Yes. That's why I'm talking about it now. Okay. But the good thing is, because you're in front of the screens, because you're in front of the platform, if that does happen, yes, you're going to be mad, but you'll be in panic mode. And the one way to get out of it is you're going to hit a hotkey here called exit at marketing cancel. Okay, there's a way out. Just hit the exit button. Get me out. I want out. And then figure out what the heck just happened. Okay. So again, not a great way to start a webinar, but you know what? I have to just, because I'm a registered person, I have to talk about some of this stuff. And you know, I think everyone's eyes should be wide open, especially if you're brand new. So kind of boring, but it's important to me, and I think it should be important to you. All right, the second slide, and this is the last slide, and then we'll move forward, is my relationship. This is Bert. I'm Bert from Daniels Trading with CFRN. Okay, so CFRN has a set of trading tools. They're built inside my platform. Okay, my platform is called DT Pro. Okay, it's the same platform that Mike and Dwayne use. Okay, it's right here. What you see in front of you on the chart, that's a CFRN indicator set. Okay, it's really simple to download them into DT Pro. Okay, just a few right clicks and you got the indicators flowing. Okay, so I support the platform, the execution, the brokerage, if you decide to go down that path. If you have problems with the platform, well, hey, you know what, I just can't get this downloaded or what have you, you can call me at the trade desk, right? And then I'll walk you through it. Okay, so that's my role. CFRN, it's their indicator set, right? As outlined here, they're software trading tools. They're a third party. They're the educator. Okay, so if you raise your hand and say, hey, I want to be a CFRN member, okay, any funds that exchange hands is going to be between you and them, CFRN. Anything on their website, any videos, the Logic 247 that you have in front of you here, okay, products of theirs, Thursday night workshops, all that stuff, okay, if you're having trouble with, you'll reach out to them directly. Support at CFRN.net is a great email to have. Valerie will pick up. She's really responsive. So you have that, you'll have that flexibility if you run into problems with that. A lot of people will reach out to me either way. Michael's could be running around, Dwayne's on the radio, so a lot of people know they can contact me. So if you just call me at the trade desk, I usually can get a hold of one of the guys there and get you back on the right path. Okay, so in the end, if you decide to take the plunge and get the indicators, and you decide, hey, I'm going to use the DT Pro platform because Michael and Dwayne has it, and I know I can access somebody if I have questions, you'll be calling me, okay, and I'm the guy that'll pick up. Okay, the indicators are available on Ninja. Okay, the biggest difference is getting a live body on the phone, getting someone to talk to and help you walk through the process. Okay, that seems to be the biggest difference. So we're going to spoil you at the desk here. Okay, and you know, I'm in the room every single day. I'm in the background. If Mike's out, I might pop in and make some observations. So I know the setup. I can teach the setup. So if you have questions, you have another resource that's always a phone call away. So it's a win-win situation. I do the CFRN Thursday for a reason. It's a mutual benefit. If you do well, I do well. Okay, that's the whole idea. All right, so I take an hour out of my time for guys to look. If you got a question, raise your hand. If you're learning about the stuff, hey, come talk to me. Let's hang out for an hour. Okay, so again, that's kind of the relationship here between Dwayne and I and CFRN. Back, I think when we first started, at least when I got introduced to them, it started 8 years ago, I think, maybe 8-9 years ago. It was just radio. And I ran into Dwayne and he said, hey, look, pop in on the radio program because you bring a lot of knowledge to the program. You can answer questions, you can talk about markets, you can offer some opinions. If there's any news reports, hey, can you dissect them and tell us what's up? So it was a good fit. But you know, what I saw over the years is in the question box, everyone's asking Dwayne, show me how, show me how, show me how, show me what you're doing, how to do it. So together, he got together with Michael, and they're both TradeStation developers, and our platform reads easy language. So it was kind of a perfect timing, perfect fit. The platform is free, so the only thing you pay for is data. So it was kind of like a just perfect timing. Okay. So that's how the relationship is. The point is, there's no commingling. All right. There's none of this. I don't work for them. They don't work for us. Okay. They're a third party. Okay. I'm just supporting them because I support what they're doing, and they make an effort to spend time with people to try to make them successful. That's my goal on Thursdays, and I think they're doing it the correct way. Okay, there's a lot of shady stuff out there, and those guys usually in the end get in trouble. So, all right. So, a sip of water, and we're going to break down. We're going to break down the trade setup. Okay. So let me get rid of that. And all right, I'm good. Here we go. First order of business is the time frame. Okay. We are on a 4-tick range chart. That's what you're going to see Michael trading on in the morning. Okay. I have DT Pro. How do I get there? Gut feeling is you're on a time-based chart. You might be on an hourly. You might be on a 30-minute, 5-minute. You might be on a daily. The idea is to get to a 4-tick range chart. So we'll see right here. This is daily, and you have a drop-down box here. Go down to custom and select range bar. Make that one look like a 4, and then hit OK. You're looking at the ES chart. That's the S&P Mini on a 4-tick range. Okay. Here's the first trap that people fall into. They do the right thing. They click this drop-down box. They hit custom, but they select tick bar. All right. And they make that 2 look like a 4, and then your chart looks like this. If you're staring at something like this, it's wrong. Okay, you fell into the first trap, no biggies. Get to the 4-tick range. Things will start smoothing out. Okay. The advantage of this chart is the height of each candle is 4 ticks in height. Okay. They might look bigger, they might look smaller, but in the end, they're always 4 ticks in height. Why is that important to you? Well, when you're in the training room, you're going to start hearing Michael call out highs and lows. Okay. So what he's doing, because he knows the height is going to be 4 ticks no matter what, he can be proactive in placing his orders in advance. He can be proactive placing orders in advance. Okay. So if all the rules apply, okay, these rules here, if they're all there, what he can do, again, here's the tower. This is where we do our buying and selling. Okay. What he can do is he can place orders in advance above the market or below the market. So he's entering on a stop if the market goes up, or he's entering on a stop on the way down if the market breaks down. Okay. That's what he's doing. Okay. Now, day 1, day 2, you might be saying, how the heck did he get into this trade? And, what's he talking about? Highs and lows. That's what he's doing. Okay. He's preparing himself, or he probably is placing an order above and below the current market price. That's the market price here moving. Okay. He's putting in orders in advance. Okay. That's probably level 2 stuff. Okay. On the skill level, I would think as a guy on day 1, you should be, hey, can I do this? Do I want to do this? Can I follow the rules? Do I get the setup? That kind of thing. The execution part, it is easy. Okay. But I would learn the setup first, and then once you get used to buying and selling inside the DOM here, you could take it to another level and try to do what Mike was doing. Okay, so long-winded explanation on the time frame. We're on a 4-tick range chart. Okay, so that's the first order of business. Next, we're going to work on the top portion of the chart. Okay, so here's some buzzwords. The red and blue line is referred to as the MA1. Okay, nothing fancy about it. The green line is referred to as the BBC. That is short for bullish bearish cross. Okay, combined makes up step number 1. Okay, which is this. If the MA1 is red and crossing the BBC, that's a bearish cross. The MA1 is blue, crossing the BBC, that's a bullish cross. The one that's highlighted here is a bearish cross because the MA1 is red. Okay, so now what we're doing is we're looking for shorting opportunities. Okay, shorting opportunities. Now note, I didn't say go long here, or go short here, go long here, go short. I said we're looking for buying and selling opportunities after the cross or after step 1. Okay, because that leads us into step number 2, which is this. The normal thing for the market to do after this cross is to gravitate or start flagging or trade to this green line, the BBC. That's the normal thing that should happen after the cross. Okay, so we're looking for an attempt at the green line. We're looking ideally, okay, the normal thing is for it to touch, but then we're looking for a close in the direction of the trend. Okay, we defined the trend as being bearish because the MA1 set everything in motion. It's red. It's crossing the BBC. So now we're looking to get short. Okay, where are we looking to get short? Well, it'll be a reaction off the green line. Okay, we're looking for the market to do the normal thing, touch the green line or the BBC, and close in the direction of the trend. Okay, that is step number 2. 2 things to point out. Okay, sometimes the market has so much bullish and bearish momentum, it doesn't get to the green line, like right here. Right? We get going, it's doing the normal thing, and then it falls apart, right? That happens. Okay, that's why what I'm going to talk about when we get into the live session is we're going to get in the habit of drawing trend lines. You're going to see Michael do it all the time. We are going to draw trend lines every time the market's making an attempt at that green line. Okay? Because if this happens, all right, and we have a set of conditions that's happening down below, which I'll go over shortly, we'll take action. Okay? But the idea is you're going to get in the habit of drawing trend lines. Okay? So be prepared for that. A big question that I always get is this. Well, why don't you just put an order in here and sell it if this is the normal thing to do? I mean, look at the reaction you got. Yeah, that's after the fact. Okay, it looks pretty after the fact. But sometimes you'll get a market that just slices through it. We saw a little bit of that right here, right? Okay. We saw a little bit of that right there. What we're doing with this candle, okay, this candle here, let me get the highlighter up. We're sacrificing price for action, okay? That's what we're doing. We're using this action as, hey, you know what? It's doing the normal thing. It pulled back to the BBC, and it's reacting off it, right? In a bearish environment. Hey, maybe this is a clue, additional clue. We should be getting short, okay? So, no, we don't place orders in advance at the green line or the BBC. We wait for the market to react off of it, okay? All right. So we got check 1. Step 1 checked off, step 2 checked off. So now we're going to look at the oscillator portion of the chart, which is called the slingshot. Okay, the trade setup happens down here, believe it or not. Okay, it all starts and ends here. Starts up here, ends here, but there's a lot of things that are going on that create what's the setup. Okay, it all exists down here. So here's some buzzwords down below. The red and blue line here is referred to as a cycle. Okay, and the green line, nothing fancy about it. It's just the green line. Okay, but together, here's what's going on, and that's why the trade exists down here in the slingshot. What the cycle is telling us is that the market has bearish momentum. It's red. Look at the slope that it has on it. Okay, it's got a nice slope to it. So along with the bearish cross, which was step number 1, and along with the market doing the normal thing and reacting off of it, okay, which is step 2, okay, the momentum is saying, look, we're going down, okay, and this green line pulling away combined with this price action here is saying, hey, this is just an air pocket in this ongoing downtrend. Okay, so that's why we're sacrificing price for action there, right? Okay, it's an extra confirmation. And with this green line pulling away and this price action here, that is the divergence, okay, or the separation that Michael is talking about in the room. Okay, this green line pulling away from the cycle. The cycle is this red line. The green line is pulling away like a slingshot, like pulling back a slingshot. Okay, the rubber band on the slingshot. Okay, this area here highlighted is the divergence. Okay, so when step 1 is present, step 2 is present, and we have that separation, the next order of business is to place an order and execute. Okay, and as I said earlier, we're just going to pop right inside the DOM here and left click, okay, and take action. That's the game plan when that happens, okay, because in the end, what we expect to happen when all the rules are in place, okay, we got the bearish cross. Okay, so we're looking for shorting opportunities. We're looking for the normal thing. Okay, the market's going to gravitate toward the green line, and we're going to look for the down close. All right, and in the process, we're going to draw the trend line just in case it can't get there. Okay, there's other reasons why we draw it. I'm going to go over that later. But hey, we're going to draw the trend line just in case it can't get there. All right, and we're looking for the divergence. Okay, we're looking for that separation that we see here, because what should happen is when that green line pulls away, what we're looking for is for the market or the green line to ultimately get into the cycle, and price should follow along and make a new pivot low. And when these two come together down here, this is the place where we get out of the trade. That's our exit strategy right there. Because what we expect to happen is this, and that's why the trade exists down here. The green line is going to pull away and close the gap. Pull away, close the gap. Pull away, close the gap until what? The cycle turns a different color. It's blue. So the market has bullish momentum. Okay? So then what we look for is the green line to get underneath and create bullish divergence. So what we end up doing is we end up selling that top, selling that top, selling that top, buying that dip along the way. Okay? That's it. That's the trade. And the number one thing that should be happening along the way here is it should be trending. If we're in a downtrend, it better be making lower lows. And if we're got some bullish momentum, it better be making higher highs. Okay? And that's a big trap that people have a hard time grasping, the trending action of it. Okay, that's it. So you're in a 4-tick range chart. Okay, so you're going to be scalping. That's what you're signing up for. You're not learning to pick the top here and pick the bottom here and trade it from point A to point C. That's not what's happening with CFRN. You're learning to take a piece out of the middle, and you're going to move the stop, move the stop, move the stop, move the stop until that green line gets into the cycle and you close the trade out. Okay? You're signing the scalp. You're signing up to do that. You're signing up to be in front of the trading platform, in front of the screens. Okay? You're learning, you're going to be in front of the screens. Okay? So you're going to have some discipline. Okay? To follow the rules, trail the stop, and get to learn the platform that you're trading to. Okay? So that's why they suggest, look, you should get comfortable before you push any buttons, before you put any live money at risk. Okay? And that's a good thing. You know, the emotions of it, up and down part, okay, that's different. Okay? But the functionality of pushing the buttons and learning the rules and having the game plan and then having the confidence and being comfortable doing that, that's huge. That's what the demo is for. Okay? When there's live money at stake, oh, that's a different thing. Your stomach's going to go up and down. Okay? But, you know, you're going to have to learn that along the way. Okay? So that is the setup. So Mark's question is, where exactly do we click on the DOM? Well, if there is a setup, we're going to left click in the green, or we're going to left click in the red. That's simple. Okay. We left click in the green, we expect the price to go up. That's how we make money. And we'll left click in the red, and the prices move down. That's how we make dough on the way down. Okay. So it's right there. All right. So what we're going to do now is we are going, okay, we're going to take, come on, mouse, here we go. We're going to take these set of rules, okay, and we'll go over it in the live environment. Now the one thing, and the big thing I skipped over is this guy here. Every trade has an 8-tick stop attached to it. Okay, 8-tick stop attached to it. So if you are brand new, if we're trading crude and gold, you're risking $80 a contract if you're dead wrong. Okay, as soon as you push that button and you're in the market, if you're dead wrong, you're risking $80 a contract. If it's closer to the S&P, it's $100. If it's the mini Dow, it's $40. Okay, so that's what you're dealing with. Okay, 8-tick stop attached to it. Okay, sorry about that. All right, now we'll get inside the live market. All right, so if you have a piece of paper out, you're taking notes, whatever the deal is, the point is, the number one thing on that piece of paper should read, is the market trending? Okay, that's the number one thing that you should have on that piece of paper. It should be at the top. Okay, because if a market is trading sideways, that's our number one disqualifier. Okay, so I'm looking at the ES chart right now. In fact, let me break down the live account. Getting in demo mode. Okay, we're looking at the ES chart on a 4-tick range. We talked about that time frame earlier. Okay, under that number one, are we trending? I want you to get in the habit. You can write it down. Bert said, get in the habit of hitting the zoom out button. Okay, a few clicks. Okay, will make the difference on whether or not a market is trending or not. Okay, 1, 2, 3. Okay, so I'm looking at the ES chart. Are we trending? Are we making some lower lows? Yes, we are. Okay, so we got that covered. Okay, so the next thing is we're looking for step number one. Step number one was right here, correct? The MA1 is red and crossing the BBC. So now we're looking for shorting opportunities. Okay? What's the normal thing for the market to do after the cross? Pull back to the BBC. The BBC is this green line, right? There it is. Not only are we looking for the challenge of the green line, but the close in the direction of the trend. Okay, the trend was defined by that red MA1. Okay, so we're looking for a red candle. Okay, so that's step one, and that's step two. Okay, as I said earlier, as soon as we get that cross and we start gravitating toward the green line, we are going to get in the habit of drawing a trend line. Okay, and there's two reasons why we do it. Number one, we said earlier, okay, we never know if it's going to get here. It might have so much bearish momentum, it can't get to the green line, it falls apart. Okay, so if that happens, we have to be in a position to take action. Okay, well, fortunately, we did do the normal thing. We did get to the green line, and we did get the close below. All right, so ours gravitate toward the slingshot, right? And lo and behold, our oscillator or the cycle went from red but to blue. Okay, here's the scoop on this. We want everything to be the same color. We want a red MA1. We want a red candle. Ideally, we'd want a red MA1 here. We want also a red cycle with slope. I'd even add that part of the equation. Okay? You want everything to be the same color. You want to stack all the probabilities in your favor. That's the ideal scenario. That's an easy and obvious setup. Okay? Now, you are going to find out that cycle will turn color on you. If it does, as in this example here, it starts watering down the probabilities. Okay? As long as this is flat and it's not up at a 45-degree angle, okay, it requires a close below the trend line before you could take action. That's a requirement. All right, so let me go over this again. You get a bearish cross. The normal thing for the market to do is to pull back to the BBC, and then we look for the down close. If the cycle was red at this point in time here, okay, we don't need the trend line. We just need the down close, and we just need to push the button over here. Okay. If the cycle turns blue, as it does here, the trend line is required, and a close below that trend line is also required. Okay? It's also required. So a trend line close below. Okay? So that's a valid short position. Okay? Inside this ongoing downtrend. Okay? The result is a loss. That trade. Why is it? I don't know. You're not going to win every time. But as I pointed out earlier, okay, if that cycle turns color on you, you're watering down the probabilities. But inside the training room, you're going to see Michael do a lot of these trades where the cycle is different colors. Okay, so I'm pointing it all out to you so you can try to absorb what's going on. Okay, all right, let's get back to the live action here. So I'm going to delete that trend line, and notice now we have a bullish cross. The MA1 is blue. Zoom out, zoom out. Are we trending? Do we have higher highs? That's the number one thing on your piece of paper, right? The answer is no. You got a double top here. Notice the other thing too is, look at where the dynamic resistance is. They're side by side. So if you're unsure if we're trending, okay, the first order of business is to zoom out, okay? But the second order of business, if you're unsure, if you see dynamic support and resistance side by side, okay, like this, that's a clue that we're just stuck in a range, okay? And that is the first disqualifier. If we're trading back and forth, back and forth, back and forth, that's no good. That's not good for the home team, okay? But notice what you're seeing here. After the cross, a normal thing for the market to do, pull back to the BBC. And also note here too, look at the cycle. It's blue. And we have that bullish separation that I outlined earlier. So it's got all the variables right here with that close. It's just lacking a trend. Okay. So it's got step 1. It's got step 2. It's got step 3. The cycle is blue. That stacks the probabilities in our favor, and we got the divergence. It's lacking a trend. Okay. So no action. We're not going to push any buttons because it's not trending. Okay. Just an observation. The fact that this is blue, it's got a decent slope to it. That's not bad. Okay. This does concern me. Okay. And the fact that the ES is down 46 points, no, that's not easy and obvious to me. Okay. Remember, that's one of the biggest traps people fall into. Most people would have taken that if they're rookies. And they're getting excited about this and that. I can understand it. And they're getting excited about this action. Okay. But this is a red flag. Okay. We need to be making higher highs in that example. Okay. So I would take note of that. Okay. No matter what happens here, win, lose, or draw, that's something that people get in trouble with. So, all right. So we're going to move on to a different market. All right. Let's go to crude oil, because crude's down to 350. So we should see some trending action there. So note, here's the crude oil. And notice the first thing I do, get rid of that email, is zoom out, right? We just talked about that. Okay, now as I said earlier, dynamic support and resistance is going to tell us a lot here, right? All right. We had a double top here. We had a little bit of congestion here, and we finally broke out. Okay, we finally broke out of that little range. You really can't see it because this thing's really moving. Okay, but we are trending. Now we have another double top created. So right now, the crude is a mess, and I wouldn't touch it. Okay, we're barely making higher highs. Okay, we were congesting here, then we broke out, and then finally the market did the normal thing and pulled back to the BBC, right? And now we're creating some more chop. Okay, and the slingshot is not giving us really enough guidance to say go long or go short. Okay, so crude is a mess, so we're going to stay away from it. Natural gas. Okay, zoom out, zoom out. Had some sideways action here, right? Finally broke out. Okay, this action here tells me we're trending up. In the process of it doing the normal thing, which is pull back to the BBC, okay, we draw a trend line, right? Here's the touch, and here's the close in the direction of the trend. The trend was defined back here as a bullish cross because the MA1 was blue. Okay, our eyes gravitate toward the slingshot. Uh-oh, it's red. So what does that mean to us? That waters down the probability, right? That's what we talked about. Not only that, because it's a different color, we're going to need this trend line, and we're going to need a close above it, which it does here. Okay, but what you're staring at here, all right, is number one, it's watering down the probability, but number two, now it's got that 45-degree angle to it. Okay, that's that warning that I was talking about. Different color, not good for the home team, but if that's curling against you, all right, that's a red flag that the market is not going to go in the direction of the trend, but it might be actually doing a cycle reset. What we call. All right. This is disqualifier number 2, by the way. Okay. When the cycle is a different color and it's against you at a 45-degree angle. So what happens a lot of times is you get sideways action or it fails, as it does here. So that is the second trap that people fall into. Okay, they get excited about the pullback because we just broke out. They get the up close. They did that correctly. They drew the trend line. They did that correctly. And we closed above it. Okay, they got all excited about this. Okay, right here, okay, there's not a lot here, but we're at a 45-degree angle. Someone might say, hey, that looks 30 or 25%. My answer to that is, if you have to ask yourself those questions, just don't do it. Okay, so when in doubt, stay out. Okay, it has to be easy and obvious, and that's gonna result in less trading. Okay, the house is gonna be disappointed in that, but in the end, okay, you take a lot of the what ifs kind of scenarios out of the equation. Okay, it's easy and obvious, then there's no other filtering to do. Okay, once you see the setup, you're gonna go inside and feel confident that you can left click and get long or get short with confidence. If it doesn't work out, it doesn't work out, because they all don't. All right. So right now, natural gas, out of all that talk, sideways. Going back to crude, we have the bearish cross. The MA1 is red and crossing the BBC. 1, 2, 3. We are a mess. This crude oil is side by side. I wouldn't touch the crude. Okay, congesting. Go back to the indices. The ES. See, that warning flag, everything was there on the ES, but we weren't trending. A lot of people would have lost on this trade. Okay, we're not trending. Okay. Now you might say, hey, we have a bearish cross here. That's correct. We're looking for shorting opportunities, but we're not trending. We have a double bottom in place now, right? We got something over here that we had a pretty good reaction off of. We found support there again, and we bounced pretty good off of that. Okay, we're sideways, so stay out of there for now. Okay, let's go to gold. Gold's traded a lot in the training room. All right. Okay, notice how I zoomed out. Okay. All right, so hold on. I want to do something here and show you. I don't want you to touch anything on your platform. Okay, let me tell David, I'll call him back. David, I'm in the webinar. Let me call you back. Bye. All right. Why did I do what I just did? Okay, I went inside the DOM and I left clicked. All right, there's a few reasons why I did it. Now, don't do anything. I just want you to follow along. Okay. Number one, this is going to give me the ability to show you how to place a trade, how to manage a trade, and make some observations here. Okay. So number one, we had the bearish cross, correct? The MA1 is red and crossing the BBC. We activate the trend line. DT Pro users, you're right here. Left click. As soon as you get the cross, click that trend line button and start drawing. Okay? What's the normal thing for the market to do after the cross? Pull back to the BBC. That's the close, that's the touch, and that is close. Okay? Right here, that lights the match. Do we have separation? Is the green line pulling away? Yes, it is. What color is the cycle? It's red. Okay? It's got all the ingredients, right? So what I did is I went inside the DOM and I left clicked. Okay, and now we're short. We're short at 1284.90. Look on top of the DOM of the tower. It also shows us there 1284.90. And see this red horizontal line? This also lets us know we're short right there at 1284.90. Okay? So there's 3 places where it says, hey, you're short right now. So with the down close, the close of that candle was 1284.90. So I left clicked at the close of the candle, 1284.90. Okay? That's what activates the short. Okay? Now, are we trending? Okay, we were trading side by side, sideways. Right now, no, I would say we're not trending. I pushed the button, okay, just to show you how to place a trade. But also, I wanted to show you this thing over here, which is called the bracket order. Okay, so here's the scoop. See this Tinker Toy triangle up here? Notice how I left click. Note the bottom of the DOM, right? Watch this. Okay, the bottom of the DOM opens up, correct? If you select buy stop and sell stop, like I did here, you got a little check mark, and you right click over it, factor in ticks, and right click over this one, factor in ticks. If you make the factor 8, what this will do, it will automatically place a stop loss behind it 8 ticks away. Okay? Remember, every trade has an 8 tick stop attached to it, right? So that's why we do that. All right, so here's our short entry, 1284.90. 1, 2, 3, 4, 5, 6, 7, 8. Right here is our stop loss. It's marked out by a number 1. Okay, so we're short here, and that's where the stop loss is. Automatically placed for you. Okay, you want to take it a step further, and I encourage everyone to have this little box open. You select trading and go to positions and order management. Left click on working orders, and there's your stop. It's right here. Okay, it's in the box. That stop is associated with this one right here. Okay, so I'm brand new. What does that all mean to me? In the training room, Michael uses brackets. Okay, that's a good thing because it automatically places a stop for him, right? Doesn't have to do any thinking. That's one less click he should have to do. He just executes and then manages the trade. Okay, so the rules, the risk management rules, okay, is this. If the market goes plus 4 ticks in our favor, 1, 2, 3, 4, we move the stop down to break even or our entry. We take the risk off the table. Okay? The MA1. If we close on the other side of the MA1 below here, we move our stop to break even. We move it to our entry. So how do I do that, Bert? See the number 1 here? Put your mouse over it and left click. Hold the left click down and drag and release. All you're doing is changing the stop. Okay, 1285.80, watch this. It's been moved. Okay, that's all you have to do to manage the trade. Okay, that's it. So yeah, if we're short from 1284.90, if it goes to 1284.80, you're in the green. That means you are making money. Okay. In fact, I could take it a step further. Yeah, let me do something real quick. Do it even this. Apply. Okay. Maybe it's not. See where it says 10 bucks, 1284.80. We're 1 tick in our favor. Now it's 2 ticks. Your P&L is moving. Okay. So we're looking for it to go plus 4 ticks in our favor. We move the stop to break even. Okay. So we're short the gold with the stop 8 ticks away, okay? And if it moves 4 ticks in our favor, or on the other side of the MA1, we will drag the stop to our entry, release it, okay? That's the game plan. All right. Now, as I said earlier, the reason for doing this trade is to show you how to place an order. It was a pretty easy and obvious slope to the BBC in the down close. All right. Now, looking at this picture, we did make a lower low here, right? We were congesting here for a while, and we did break dynamic support. Anybody who's a CFRN member, okay, this is a pretty good clue. Okay. So there's a lot of things that I like here. Okay. When I zoom out a little bit further, okay, to me it looks like we're just kind of expanding this rectangle. Okay. And maybe, you know, it's a 50-50 here, and I'm not interested in 50-50. Okay. So we are short. Okay. So long-winded explanation of why we did what we did there. Okay. But it had a lot of the good stuff there. Okay. If this turned color on us, what's interesting about this too is, see how this has turned color on us? It's blue now. We weren't in this trade, okay, and you'll run into this, trust me. Okay, the cycle will turn color midstream here, and you'll be like, uh-oh. Okay, the trend line would be required. Okay, and a close down here, a red candle underneath the trend line would also be required because the cycle is blue. The one thing that you have going for you is that it's flat. Okay, it doesn't have this slope to it. That's not good. It's flat. Okay, so that's unreasonably, you know, that's okay. All right. All right. So we're not gonna start the gold all afternoon. So let me do this. I'll keep it in the background. If it starts heading down, we'll talk about it. Let's go back to the indices because it's rocking and rolling, and we just made another new low. So as far as I'm concerned, we're trending again. Okay. So we're looking for the market to come back to where? The BBC. Okay. Now it did that right here, right? Looks good after the fact. Okay. But so let's see. Let's see if it can come back here. Take advantage of this. Okay. So what I'm going to do, we have a bearish cross here, right? So we should be looking for an opportunity to get short. And in the process, we activate the trend line. So that's what we're doing. Okay. If the market starts gravitating toward that green line, okay, it starts gravitating toward the BBC, you're going to see the green line inside the slingshot here pull away, and we'll have that divergence. Okay. So let's see. We're trying to get short, and if that's the case, we're going to left click. We're going to left click in this area here. Okay. All right. We just need another candle. Okay, it takes 2 candles. Okay, it takes 2 candles to draw a trend line to connect the dots, right? We'll see. Let's see if it gets there. Okay. So you can absolutely hold it. If you want to go, what's that? Take our time here. Okay, no rush. Yeah. See if we can get back to that BBC. But everything's suggesting lower. Now, do you want to add the flip side of that trade right now? So hold on. Silver bounce today. Yes, we're trending. Okay, so we notice what I just did. I zoomed out. So I'm not asking you to go to a 30-minute or a 5-minute. Okay, the 30 minutes is going to tell you the same thing right now because we've been down all day. Just zoom out. Yeah, there's something more to do to zoom out. Okay. That notice it gives you more of a landscape of what's going on. If you're going to learn what's trending, you got to look this way, right? All right, so here we go. Fumbling the ball here. Get rid of, erase that. Blow this up. Draw this trend line. Okay, look. It's blue. So we close below the trend line is required, correct? All right. All right, so I kind of dropped the ball there. Okay, so there's the two dots, the two candles to draw the line, and that was the down close given. Okay. All right, so hold on. We missed it. That's fine. That's the close. Okay. We did that because the cycle was blue. Okay. Look, we're not going anywhere. It would have resulted in the break even, so no harm, no foul. Okay. So I don't feel bad. But so let's see if it happens again. So now we have to make a new low. Okay, we got a double bottom before we can get crazy about getting short again. Okay, so be patient. Okay, we're back to the BBC. That's normal. Okay, get in the habit. I don't care. Draw the trend line. I know there's a double bottom. Draw the trend line. Okay, the trend line is required. Why is it required, guys? Because the cycle is blue. Now, notice what's happening here. It's starting to curl up a little bit, right? Okay, so right now, if it were me, I would not touch this short right here because this is starting to curl up. Okay, but that is the down close right here. Okay, this right here is the down close below the trend line. Also, you have a double bottom. Okay, as I said earlier, we need a new low before we get short. We need a new low. Okay, so again, these are some of the things that people fall into if they stub their toe. They get excited about this and they forgot, uh-oh, double bottom. Okay, and now they're getting a little bit of grief. It may fall apart here and they're made whole on it. Okay, but you really want the market to be trending. Okay, and right now we're kind of consolidating. And consolidation is usually happens when you start getting that cycle that's a different color. Okay. All right. Once you're drawing a bunch of trend lines, the quickest way to get rid of them all, see this little select all button? If you left click, that black X will highlight. Click that and it'll get rid of all of them, especially if you're on a single thread like me. A single thread means one chart, one DOM, one set of quotes. And that's somewhat of a good thing because if you have 6, 7, 8 charts open and you have they're all 4-tick range charts, man, you got a lot of data that's flowing in there and it's probably slowing your computer down. So you better think about that. Okay, I just try to keep it simple. Yeah, that's right. 4.6 by 4.9. Here's our gold. Okay, there was plus 4 ticks. No, not yet. All right. Anyways, the quickest way to get rid of a trade, if you say, hey, I got to get out of here, I got to go to work, exit at market and cancel. This hotkey here. Left click gets rid of your position, but any orders in the gold, okay, in that market. So that same positions and order management button should be blank. So anytime you walk away, this thing should be blank if you think you're out of a trade. Okay. All right. There's that S&P just giving everyone grief. Yep, it's coming down a little bit. Okay, but all right, so let's move on. Try the NASDAQ. NASDAQ. Consolidating here. Notice support and resistance side by side. It's a little confused right now. The mini Dow. We did make a lower low here. Okay. Here is that point I was talking about right here with the S&P, to exercise caution. Okay, see this? And you see that down close and that down. Okay, see this? Notice what we did? All it suggests is, hey, we're probably going to get a bigger pullback. Okay, so you have to be, you have to be conscious of that. Okay, ideally, you want everything to be the same color. You can't stress that enough. Okay, you want to put the probabilities in your corner. That's all you have to do. You're not going to get a lot of trading opportunities. A lot of times, Michael is taking a lot of those trades that that are blue and questionable about the slope being a different color. That's something that you're going to have to decide whether you want to do or not. Okay. All right, let's go to the currencies because it works for everything. Okay. Okay, here's a bearish cross. Here's the pullback to the BBC. Up close, up close, up close. Here's the first down close. Right here. Okay. In the process, we would draw a trend line. Is the trend line required? Yes, it is. Why? Because the cycle is blue. So we will need a close below the trend line in order for us to take action. Okay? What's the slope of that cycle? Is it at a 45-degree angle? Yeah, it's pretty close. Okay? When in doubt, stay out. Okay? So number one, okay. Are we trending, right? Are we trending? Well, we're kind of in an uptrend here. Okay. Zoom out, zoom out. This is actually the first break in this ongoing uptrend line. Okay. This is disqualifier number 2 hitting us in the face. Okay. And the third qualifier is this black step line, usually associated with the cycle turning color on you at a 45-degree angle. Okay. The black step line is great for trend following. Those that are following logic know this really well, right? Okay. But it's also used as a disqualifier on the 4-tick range. Okay. Which means this. As soon as you get the close in the direction of the trend right here, and if that black step line is pierced the BBC, as we note here, that's the third disqualifier. Okay. Again, that's usually associated with a cycle color that's not the same color and probably pitching a 45-degree against you. Okay. So I think if you worry about number 1 and 2, number 1 being are we trending, and 2, is this a different color and is it sloping against me? This number 3 will just come into play. Okay, it'll take care of itself. All right. All right. Nothing even easy and obvious there. Here's the British pound. Sideways action here. Swiss franc, certainly in an uptrend, right? Making higher highs. That one's an easy and obvious one. It's losing a little bit of momentum here. So we're looking for the market to pull back to the BBC. The Canadian, okay? Zoom out, zoom out, zoom out. Okay. We had a bearish cross here. And we had a few attempts at the BBC, right? BBC, red cycle. Okay. Here's another one. Different color, but flat. Okay, so there was a few setups there. Get excited about. The Mexican peso did an about face here, but are we trending? Well, we are making some lower lows, so I would get excited about the Mexican peso getting short if it pulled back to the BBC. Okay, that is a normal thing to do after that cross. Aussie dollar. Is that trending up? Yes, it is. Marginally got over this high. Okay. So we would draw the trend line off the tops here, including the wick, the corner of the body. Okay. And we're looking for the market to pull back to the green line, the BBC. Okay. Is the trend line required? Yes, it is. Why is it required? Because the cycle has turned color on us. Okay, it's red. It should be blue. Okay. Do we have separation? Is the green line pulling away like a slingshot, pulling back the rubber band? Yes, we do. We have a lot of space here. Okay. So there is some divergence. So this has a lot of opportunity. Okay. But it's going to have to close above this trend line in order for us to take action. All right. Let's not stare at the Aussie dollar all day. Let's go back to the indices because that thing's rocking and rolling. All right, so there it is, sideways action, right? Defined by, as I was saying earlier, a slope, a blue cycle, okay, starting to curl up. So we need to make a lower low before we can get short, okay? All right, let me add one more piece, okay? This can be used on different time frames, okay? So I know there's people that they're diehard YM traders and NASDAQ trader and mini Russell guys, okay? That's cool, but this market is moving fast on a 4-tick range chart, okay? So here's what you can do. When markets are moving fast like this, you can go to an 8-tick range chart, okay? And the NASDAQ, you're still getting the same, holy cow, it's sideways action here, okay? The same rules apply. Are we trending? Get in the habit of zooming out to identify a trend, okay? If we get a bullish or bearish cross, activate the trend line. The only thing that has changed is this, for stop losses, okay? They should read not 8, they should read 16, okay? You're just doubling it up.
It's already been taken care of.
Okay.
Stop talking about that fee. That's been deducted.
Double it up.
Credited back to your account.
So we know, so let's see if it happens. We did this last week. So the NASDAQ is obviously not trending. Look at the dynamic support and resistance. I'm confused. I'm not sure. Look.
Yes.
Okay. It's gonna tell you. When in doubt, stay out. All right. YM. Okay. We were doing a lot of the same things and we finally broke dynamic support here. Okay.
We continue with the straight.
But look at the slope of the cycle. Okay, that's a warning flag to the shorts. So we're not going to do anything with the YM then. The mini Russell, this one's pretty easy and obvious. Lower, lower, lower. Okay. So if we get a pullback in the mini Russell, I would consider that short. Okay. Getting short the mini Russell. All right. Here's an interesting observation. The daily S&P chart. Look, I'm a swing trader. I want to take bigger positions. Dwayne probably highlighted this in Logic. Daily chart. Bearish cross. Normal thing for the market to do, pull back to the BBC. Right? Pull back to the BBC. In the process, we draw a trend line. Why? Because that's what we're programmed to do. It touches the BBC. It has a down close. Okay? Is the cycle red? Sure is. Do we have the separation? We sure do. Okay? That's it. That was your first indication that this market could fail. It had all the active ingredients on a daily chart. Okay? And look, the market's just expressing itself. What do we expect the green line to do? We expect the green line to get into the cycle. And in doing so, the market needs to make a new pivot low, or it should. So you can use this on larger time frames. Logic is built on 30-minute time frames, right? Same thing. Okay? So if I'm a Logic user, right, I would be on a 30-minute chart. And what would I be looking for? Anybody in the room. We've gone over this a million times. Okay? The market ultimately is going to gravitate to that green line. So if someone called me up today and say, "Hey, Bert, I need to get short this S&P. I want to get short. Where should I get short?" I'm going to say, around 28.20. I would start looking there. Okay? Because that's the normal thing for the market to do. All right? So as Dwayne says, a lot of times the indicator set is just giving you, how does he say it? The flow of the market. I think that's what he says, the flow, or that's what he's referring to. Okay? It's giving you the kind of the rhythm or the flow or the ebb and flow of the market. Okay? It does all the normal things. That's cool. Sometimes it doesn't. If it doesn't, then then you stay out. Okay. All right. So you can use larger time frames. Okay. All right. Zooming out. We're still congested. If we make a lower low here, okay, then we'll look to get short. Okay, because we've been in a downtrend. Okay.
Okay, so you're all set. Now I just wait to see if there's a film.
Crude oil finally broke down. No, I wouldn't have taken this one because of this. Okay. Again, another warning flag. Let's do this. I sold it. No, you should not sell it. Okay, but I sold it. Okay, again, in order to sell it, I left-clicked in the DOM to activate it. Okay, here's our stop loss. 8 ticks away because the bracket's already been set down here. Okay. I sold it because of this candle here. It was a pullback to the BBC. Okay. All right. What's wrong with this picture? Let's blow it out. First of all, let's zoom out. Okay, we're making some marginally lower lows. Okay, I wouldn't say that's trending. Okay, so that's kind of a red flag. I draw the trend line. Originally drawn like this. Originally drawn should look like that. Okay. Oh, there we go. Okay, is that a close below the trend line anywhere in here? Is it required? Okay, that's it. That's the first down close after the, right, the touch. Well, that's a different color, and it's got that little upslope to it. Okay, so there's a lot of some marginable things here on whether we should go short or not. Okay, I did it just to left click in the DOM to show you how to execute a trade. All right, and again, for us to move the stop down, we just, there's our stop. It's right here. I'm gonna left click, drag, and release. We're getting a little bit of a reaction here, which is cool. You know, with crude down 370, the odds are we could come down here and, but okay, we're gonna drag and drop, drag and drop, drag and drop to stop. Okay, that's how you just move it. That's all you have to do. Okay. All right. Let's exit at market and cancel. So I don't want to start crude oil. I'll take one more look at the ES. Okay. We did poke our head below it. That does not mean we're trending. Okay, so don't fall into that trap. Okay, let's spend a little bit of time underneath here. Okay. Spend a little time underneath there, not just poke our head above it, below it. Okay. All right. So it's a little bit after 2 o'clock. So I'm going to wrap this one up today. Okay. Again, are we trending is a big deal. The way to help you define that, hit the zoom out button. I would also get in the habit of hitting the trend line after the cross, because at the end of the day, you should have a ton of trend lines drawn on your chart. Okay. If you want the quickest way to get rid of all the trend lines, select all button, hit the black X. That's a quick way of doing that. The other thing to keep an eye on too is the cycle. Okay, if the cycle is a different color, what does that mean to us? The trend line needs to be drawn. Okay, a close over above or below the trend line is required. But if it is a different color, okay, than the direction of the trend, okay, that's one of the big traps that people fall into. And if they're getting stopped out, that's usually this guy here. Okay, and that's it. Okay, easy and obvious. All the same color is definitely the way to go. Okay, you want to stack all the probabilities in your favor. If you have any questions, call me at the desk or shoot me an email. Okay, I'll see you guys in the room in the morning. I'm in the background all the time. Not all the time. I'm not speaking, sending out emails and stuff like that. So it's been recorded. I'll decode it. I'll send it to YouTube. You should see it tomorrow on YouTube. All you have to do when you're in YouTube is search CFRN Thursday, and it's in, I think, 2 spots. Okay? All right, see you next week, and then I'll see the members in the room tomorrow morning.